Event of $19 billion is finally over. So, are we going into a bull market and having that continue? Or is this the start of the bear market and it's all over? You know what I say is the bull market still hasn't started. It never got started, so of course it's not over. And I'm going to go through all the data tonight, point by point. I'm Cairo Copeland, this is Reinvent Ideal, and you are watching Shut the FUD Up. Good evening, Hexaco. We got a lot to talk about tonight here, because you see, I'm still in my pissed off Cairo mood here. Still ticked. I see everybody's pouring in. We got Armando, we got Fast Abdul, got Chex, got Tam. Welcome, you guys. Yeah, Cairo's still mad here because earlier not this week, but over the weekend, I went into a X Spaces, and I was being very positive, wanting to share some good news. And here's the good news I was looking to share. Like, hey guys, did you notice this here? I just discovered this here that, like, in the year 2023, we had the entire crypto market cap double in size. In the year 2024, the entire crypto market cap doubled in size. Looks like a trend is starting here, yeah? In the year 2025, what has it done? It's only gained about 17%. It's only gained about 17%, and that is not normal for crypto markets year-to-year performance. I was hoping that dropping that fact would give people something to be happy about, and that we could all stop being a bunch of bearish nihilists. But did anybody thank me for telling that, for spreading that fact? No. Nobody thanked me. In fact, I got attacked. Well, I don't know if I got attacked, but I got shut down. And they said, in their horrifically cynical voices, they said, Cairo, I don't think you understand. You see, the deal is that the crypto cycle is not year to year. The crypto cycle is 4 years, and according to the 4-year cycle, everything is still going according to plan. Okay, you know what? I mean, I don't even know why I even bother with these spaces sometimes, yeah. It's like, you guys want to believe whatever you want to believe. Good. Go. Go for it. You want to be bearish. Be bearish. Go ahead. Sell your bags. Get out. Spare yourself the misery, and then spare us the misery of having to listen to you and everything. Because I have tried on multiple occasions to engage these guys, to engage with these bears, give them a chance to prove me wrong. And, whenever I come up with anything slightly positive, they got to be the tack that pops the balloon of positivity. And here's what it's like. There's a fella on YouTube. Very talented fella. Very talented guy. The YouTube channel is called Raymond's Thoughts and Minds. He's got a great voice. Very good at coming up with commentary. Kingsway, I see a question. Don't worry, I'll answer it. Raymond is his name. Raymond's Thoughts and Minds. Incredible guy. Amazing voice. Amazing ability to come up with commentary. Very talented. But his channel to me now is just unwatchable. Or I can't listen to it. Because it's always the same nihilist, cynical, defeatist, black pill garbage over and over again. And I understand why he's so upset. Because he hasn't been laid in God knows how long. He hasn't been laid in, 5 years, 10 years? That doesn't matter. If you're a guy and you haven't had sex in a long time, yeah, it really bothers you. It really destroys you. It really hurts you. And it's going to bleed into your mood all throughout the day. Everything you do, it's going to bother you. It's going to be bleeding into your mind. It's just like starving. You starve long enough, that's going to affect your mood. It's going to affect your work. It's going to affect your ability to live. I get it. But multiple times I've offered this guy help. I've reached out to him on X. I'm like, hell, Raymond, I see your channel here and everything. I know exactly what you're going through because I went through that once myself. And I got out of it. And I'd love to help you get out of it. I got all of the information you need to get out of it. Here are my services. Here is what I know. Would you like help? Did I hear anything out of him? No, I never heard a peep out of him. And I know he saw it. But he just continues making YouTube video after YouTube video complaining about how his life sucks. So it gives me the impression that he really doesn't want help. That what he wants is to just masturbate in his misery. Because that's exactly what he's doing. Like, he gets off more from being miserable and complaining than he does from actually getting what he supposedly wants, which is laid. I think a lot of people in our own community are the exact same way. They don't actually want the price to go up. They just want to be right so they can rub it in people's faces that they're right. And because they've learned to be comfortable in their misery, because we've all been miserable for so long, because this bear market has gone on for so long, and they've learned to deal with it. They've made peace with it, like some sort of Stockholm syndrome, to the point where anything good happening or any good observation being made, immediately they're upset about it and reject it and don't want it to be true. And they got to shut down anybody positive. Well, tonight, I am going to go over all of the positive stuff that they don't want me to go over. Or maybe they don't want you to hear, or they themselves just don't want to hear it. All of the positive stuff that should put a smile on your face and give you hope again, but they will immediately dismiss it as hopium or copium or whatever they want to call it. Oh, by the way, you know what the most lowest IQ insult ever is? And when I hear this insult, I immediately deduct 100 IQ points from someone when someone says, "Oh man, that sounds like a whole lot of cope." Excuse me? You're coping, man. That's what you thought. Your point? Well, you're not telling the truth because what you're doing is you're coping. It's a coping mechanism. Okay. Evolution is a cope. What's your point? Adapting to a situation? That's how we define cope? And that's a bad thing? Because all human progress has been because of it. I just want to kick somebody in the balls every time I hear that in Minecraft. All right. They try to calm down here. And let's look at the market and how it's doing. Here it is here. Oh yeah, so I pulled this up here. This is a new website I'm checking out regularly. It's called coinglass.com. And if you don't know about this, what this does is this shows all of the stupid people that are using leverage and are about to wipe out all of their portfolios and lose everything because they're just so incredibly greedy and they just can't have the will and patience to do crypto the right way. They got to start taking out leverage. Yeah, I got zero respect for people that use leverage. Zero respect. Here we are in the best performing asset of all time, and that's not good enough for you. You got to go take out leverage in an attempt to double or triple or quadruple your returns because being in the best performing asset is just not good enough for you. And when it doesn't work out for you, well, then it doesn't work out for a lot of other people. It affects more than just you. It affects the whole market when you take on massive amounts of this. So you want to keep track of all the idiots that are using leverage. Here's where you do it. It's at coinglass.com. And here's the interesting thing here. You guys know this. Like, if you want to see all the short sellers lose their butts, all we got to do is get Bitcoin up to $116,332.89. We're not too far away from that. We're only like $821 away from that. We get Bitcoin up to there, all these shorts get liquidated, and it's maximum pain for all those idiots that are short selling Bitcoin at this point. Where is Bitcoin at right now? Let's refresh. Not too far away. It is $115,766.30. Hey, it could reach the $116,300 tonight. Could do it while I'm on the stream here. We will be checking in regularly. Look at this nice recovery here. This almost V-shaped recovery that came in. Everybody was thinking, oh, God, it's all over. It's never coming back. I mean, Solana is really posting a very nice return right here, getting back above 200,000. And once this thing goes up into the 200s, it climbs through the 200s pretty far, pretty fast, too. Look at all this stuff right here recovering. Man, earlier today, saw Hyperliquid down in the 30s. Now it's in the 40s. Sui is back to $3. Yep. Let's see. Crow has a long way to go still. Um, World Liberty Finance. That is one to pay attention to now, guys, because like what you would have seen had you been watching it. Had you been watching World Liberty Finance? Oh, they say I sound far away. You know what? I think I know what the problem is, Kent.
There, I think that should be better, Kent. Forgot to pick the right microphone in Rumble Studio. But hey, you know what? It's a good thing that I didn't have the right microphone selected earlier, because I was doing a lot of yelling earlier, and you wouldn't want me yelling right into this microphone. It would not be good. Okay, so you guys got spared there. Y'all let me know if my audio is okay or if it could be better. Y'all say. Well, here's what I want to say about World Liberty Finance. It's like way back on 10/10. That's actually Natural Woman's Day because it's XX. So on October 10th, we had World Liberty Finance have a pretty nasty red candle early in the day. Let's pull that up here so I can show it to you. Very early in the day, like in the morning, it had a pretty nasty red candle. Yeah, it's right here. See, this was 9:15 or 10 a.m. World Liberty Finance takes a pretty big dump. Goes from, 17 cents or 18 almost down to 14 cents. Then it goes up back a little bit. And then when everybody else panics, it goes down too. And let's see, it went all the way down to what? Sub 10 cents? Yeah, about 10 cents there. But what do you think was happening right here during this red candle? A lot of people think, well, this was all of the insiders in the president's social circle that heard what was going to happen, what was going on there, and they immediately sold earlier that day. So I think now a good thing to watch is World Liberty Finance, because a lot of insiders in Washington are in on that. A lot of insiders around the president are in on that. And what you see that do could be a precursor for what the entire market is going to do. All right, what else are we looking at here? Man, you Filecoin, you're so pathetic. You haven't even gotten back up above $2 here. Man, you know we're in a bull run when Filecoin is doing good. Till then, we're not in a bull run. And like this whole use of leverage that we just washed out, to me, that proves we were never in a bull run. Because if we were in a good secular bull run where things are going up as they should, doing their usual 2x, 3x, as is normal in a bull run, you wouldn't have so many people trying to squeeze out additional returns with extra risk that you don't need to take. When you don't need to take risk to make good returns, people don't take it. So because you can't make good returns in this market for the past year, people are taking on incredibly stupid risk by taking on leverage. To me, that is proof that we're just not in a bull run, because in a bull run, you wouldn't have to do that to make a good return. All right, Sonic looking good here. Ooh, the real star today is very surprising. Basic Attention Token, up 24% on the day, 46% on the week. I haven't seen this happen for this coin for a very long time. How's the Richard Hart ecosystem? Not looking bad at all here. We finally got some green on the board. And for all of the coins, all of the cores, even HEX, which is pushing 003 here again. So we're almost at a full penny, but when you combine the two hexes there. Looks pretty good. But the real star of the real thing to be proud of here, like this is a great thing about this. What made me real happy about the entire meltdown, I mean, not really, none of it would make me happy, but one thing that stood out to me that was positive is just the fact that we had such a minimal amount of loss in the Pulse Chain ecosystem. It was incredibly small. And for the first time in a long time, all of us could be proud to be in Pulse Chain. You all seen the graphic that was going around that shows how Pulse Chain did compared to Ethereum, not just in the price impact, but also in the fees. I made that graphic, and it got shared around. It was something that we could finally be proud of for the first time in a long time. Would anybody be real nice and positive about that? Nope. Everybody still wanted to whine, bitch, and complain. Oh well. Any stories going on in the main market today? I mean, overall, stocks, they recovered pretty well here, too. I mean, they're right back to their roaring selves here. And it's because they know what's coming. Someday in the near future, money printers are going to get turned back on. Yet somehow, a lot of people still think that while stocks keep on roaring forward and doing well, as the money printers get turned on, they think somehow crypto's going to keep going down. So everything else is just going to keep moving on forward in reaction to quantitative easing, except for crypto. We're going to be the one thing that goes down. And when I ask them to explain to me how that's possible, you know what I get? This is what I get. Nobody can explain it to me. I don't know why. All right. But yes, the Dow rebounded 600 points. Don't be misled by this there, though. Like when they talk about points on the Dow, it doesn't really mean anything. It's the percent return for the day that matters. And also, the Dow isn't something that really matters because it only contains about 30 stocks. Any other stories here that are worth talking about? Probably not. Yeah, don't see our stories in TradFi land. Other than Howard Marks, a very intelligent man in TradFi, says the AI frenzy isn't a bubble, at least not yet. Now, how's the dollar index doing? It went up today. 99.246. Dollar is getting stronger compared to other currencies, and this is to be expected. What's to be expected here is like the other currencies are going to weaken first. That's good. We want them to. We want the Chinese yuan to weaken. We want the Japanese yen to weaken. We want the euro to weaken. And it will. It will. Because when they weaken, that makes the dollar stronger. And that gives the Federal Reserve more leeway to weaken it when they do their quantitative easing and rate reductions as well. Because a lot of the strength that the dollar has, it's not just from being compared to other currencies, it's also being compared to like what can you earn with it. Speaking of which, how are those rates doing? Did they change any? I don't think they did change any because the bond market was closed today, wasn't it? It being Columbus Day. Yeah, no changes in the bond market because it was Columbus Day. All right. Man, it'd be nice if we actually had like some holidays in crypto. I mean, I understand like, no, we're not going to have holidays in crypto. That's kind of a good thing that we don't have them. But I think sometimes we do need to have some holidays in crypto where the markets are closed down or the exchanges are closed down because some people in our markets, there's one thing that they just can't do as evidenced by the activity on Friday. You know what it is? Here's what they can't do.
Control yourself!
That's exactly the problem that far too many people in crypto have. They have no ability to do that. A little bit of housekeeping here before we get into the top story for today. If you want a copy of this book, 100% free, it's called Your Parents Were Wrong, Debunking and Replacing Outdated Advice, I'm happy to give you a copy of this book for free. I'm absolutely happy for you to get the correct information. I mean, there's a lot of incorrect information out there when it comes to crypto that I have spent a tremendous amount of time these past few days trying to correct. Because you see, a lot of people believe some real stupid, outdated ideas like, oh, if the coin is inflationary, that's automatically bad, and it's going to do nothing but go down, and nobody should ever invest in that. That was an argument that was used against HEX that I had to take on. And I'm like, yeah, you do realize that when Bitcoin's percent returns were the highest, that was when Bitcoin's inflation was the highest. It even got as high as 50% inflation in those early years. Where Tesla was issuing tons and tons of new shares, billions in fact, and the price kept going up. Same with Amazon. Gold itself is actually inflationary as they continue to mine it. We add about 2% to the gold supply year to year with all the mining, and it's not hurting gold now, is it? No. So, of course, HEX having its fixed 3.69% inflation, rewarded only to the people who believe in holding it, is not a problem. But people think that inflation is always a problem because they believe stupid stuff that their parents told them, which were probably true back in their parents' day, but they're not true now. And that's why you need this book. Your parents were wrong. And how do you get a copy of this book? What you do is you head on over to my Substack, reinventideal.substack.com. That's reinventideal.substack.com. And you click right here where it says free gift. And you sign up right here just by throwing in an email. And then you get a free copy of this book. It costs you absolutely nothing to sign up to my Substack because I don't charge. Well, you can pay me if you want to, but it's totally optional. But I don't charge you. All of the articles on my Substack are 100% free. You just got to subscribe. It costs you absolutely nothing. You can be a free subscriber, and you get a copy of the book. I email it to you. All right? So that is a little gift I have for you, just for being nice enough to watch my live streams and check it out. Johnny, how's it going, Johnny? Good to see Johnny Chaos in the chat there. Yes, he's been making a career out of running around correcting bullcrap. And they say, here's the problem, guys. It is an order of magnitude greater to have to correct bullcrap than it is to spread bullcrap. And that's a huge problem that we have. And that's why I think Crypto 7 said it. We do need to be more positive because our enemies are supplying all the negativity. And believe it or not, or admit it or not, Pulse Chain HEX has enemies because there are people that are heavily invested in the downfall of our ecosystem. I was arguing with about two of them last night. And actually this morning too. They were trying to argue with me. And they spread lies. Absolute lies about it. They're telling me, oh yeah, Richard is a fugitive. Okay, well, can you show me the origin of the charges made against him? Seriously, show me where's the origin of the charges. If it's there, I'll be happy to broadcast it on my stream so we can finally report the truth. I asked that question, and here's what I hear. All right. So we have haters that are already spreading lies and are already making our jobs harder because it's an order of magnitude to have to correct bullcrap than it is to spread bullcrap. I think we've been one of the best behaved communities because we don't run around spreading bullcrap. Mainly because we're too busy trying to diffuse the bullcrap. All right. So, you're probably wondering what's going on there in the headline, in the title for the stream, or in the thumbnail. It looks like there's a guy on a stripper pole and talking about like how the bull market, it's not over. The bull market hasn't even started. Is that true? I mean, Friday looked like the bear market had started. Well, what happened Friday is just the fact that we had a whole bunch of idiots that were taking on leverage that they shouldn't have been taking, and the fact that they were taking on leverage proves that it's a bear market because you wouldn't need to take on leverage and you wouldn't need to take on all that extra risk if we were in a bull market that is behaving the way bull markets typically do. All we saw Friday was just a bunch of people who refused to do something very simple. You know what it is? This is what it is.
Control yourself!
So for that reason, I do say, yes, the bull market has not started. That was evidence of it. They say, well, wait. We're up 7x in Bitcoin. That's got to be a bull market that started, right? I mean, you're saying that all of the upward price action we've seen is not something that is going to be dwarfed by what's coming? Is that possible? Yes. Yes, I got a lot of evidence to show that for you here today. Got a lot to show you. Because you see, here's the debate. I'm always in this debate here with people where I say, you know, the 3 cycles that we've had. That's right, we only had 3. While they all ended up being 4 years, that doesn't mean that it is the passage of 4 years that causes them. The calendar, the time frame, is just the measuring stick of something else. Like, if we're having a bicep measuring contest, does the tape measure make your bicep 20 inches around? No. Saying that the 4 years passing is what causes the crypto market cycle is just like saying that the tape measure causes your bicep to be whatever size it is. Or that the measuring cup that you use to cook with is what causes the certain volume of the ingredient to be needed. It's crap. It's not the calendar that causes it. It's what happens within that calendar that causes it. It just so happened to take 4 years in each of the previous cycles. But that doesn't mean it's going to take 4 years this time. If I flip a coin and it lands on heads 3 times in a row, does that mean it's going to 100% guarantee land on heads the 4th time? No. What evidence do I have to support my thesis? I'm going to go through today because I know that's the question on everybody's mind. What evidence do I have to support my thesis?
A legitimate question, young man, deserving a legitimate answer. Now then.
So, the answer I have over on my Substack. If you've read the column already, great. If not, I am going to read it today because this information has to get out there. Let's get on into it. Let's see, where do I have it? I think I have it over here. It's this column recently released. Yes, I still say the bull market hasn't started. All right. So how this begins here. Let's turn back the tables to a good almost 20 years ago when I was in my early 20s. A particularly tough time for me. My self-esteem was really going on like this roller coaster ride because, see, here's this thing that was happening to me on a daily basis where I'd have a great night, and then I'd have a really crummy day. And here's why. If y'all don't know, when I graduated college, it was at the height of the Bush-Obama recession, and the economy really sucked. It really, really sucked. Now, I also had a useless degree. I studied acting, which was a waste of time. Should have never have done that. But hey, I believed in the bullcrap that my parents and every teacher and every counselor told me, and that was follow your heart and the money will follow. That's legitimately what they said. So I did follow my heart. I studied acting. I got the useless degree in acting. I went to several auditions, didn't get a damn job. And so I suffered and was extremely poor after college. What did I have to do? Out of my desperation, I became a stripper. I knew how to dance, because they teach you that when you're majoring in acting and musical theater. Need some evidence of it? Here's some evidence of it. Now, why am I bringing this up here? How does this relate to everything? Well, here's how it relates to everything, is that the four-year fundamentalists, what they're trying to tell us is that because two things happened at the same time, they must be forcefully related, and it's going to happen that way every time. Meaning, you have your crypto market cycle occur all within 4 years, and because of that, every 4 years it's going to occur, and there's nothing that can break it. They made an observation that these two things happened at the same time, and they used partial logic, which brought them to a faulty conclusion. The faulty conclusion is that time is telling crypto what to do, and so crypto must obey time. That's what they're doing there. And why I'm bringing up this stripper stuff here is that when I was stripping at the club and at private parties and everything, well, I thought I was really hot stuff because the women were cheering and they were stuffing money in my Speedos. And I thought I was real hot stuff at night. But then in the daytime, outside of the strip club, when I'm walking around and I'm trying to like hit on girls, it was the complete opposite. They're like, oh God, get away from me, you're gross. The typical rejection lines that you would hear back then. Of course, I don't know, like the rejection lines today are probably much different. But the thing about what I'm getting at here is like, because something happens in an environment that fosters it, such as the strip club, that doesn't mean that it's true outside of that environment. It's not true outside of that environment. So the reason I was getting so much woman attention at the strip club is because the environment fostered it. But outside of it, no, I mean, this is a grocery store. Or, hey, sir, this is a church. You can't do that here. And it was very frustrating for me because I was just a dumb 20-year-old that didn't know nothing. And I'm just like, why am I so invisible now? There was no lingering glances, no accidental bumps in the supermarket or anything. But the environment is everything. The context is king. So no matter like what they tell you is the relation or the cause of crypto going up, we got to think, well, is it in an environment right now where it can go up? Because like, yeah, the time says it should be. This is when it has typically done so. But what does the environment say? Well, I'll show you exactly what the environment says. Right now, it says that crypto should do nothing but go down. Here is the proof of that. Look at this. Oops. Try to zoom in on this better here. What I am showing you is the Federal Reserve's balance sheet, and this represents money printing. When it goes up, that means they are printing money. When it goes down, that means they are doing the opposite. What direction is it going in right now? It is going down, and it has been going down for a very long time. In fact, let's go all the way back to the start of the last bear markets. You see, it had been going up until about April of 2022. Had a little bit of an alt season still going on at that time. I know because I was making money in Phantom. Then it reversed and started going down. And it had been a bear market ever since. Look at the trend. It's been nowhere but down. So the environment right now doesn't foster Bitcoin going up. That overrules time in every way. Well, everybody thinks, well, it's the fourth year. It's supposed to be going up now. Is the environment fostering it? No, it's not. It's what we all have to realize. This overpowers everything. No matter how bullish the sentiment is, if they're doing quantitative tightening, we're not going to be getting a bull run like we've seen. All right? You see, even though Bitcoin has been on a tear, it's been up 7x from the bottom of the pit. I mean, and also 27% year to date to where it's at right now, 115,000. Still, it's been a pretty damp year. It's not been a great year here and everything. And everybody thinks, well, Friday proves it's all over because, now it's the end of the fourth year. And like, even if you're following the 4-year fundamentalist belief straight down to the rigid day, figuratively, October 6th is the top. Because that was when we hit 126,000 for the first time. And because we hit that there, and we have not posted a new high since, right now the 4-year fundamentalists look like they are right. All right. So, let me offer you some contrarian things here, or let me offer you opposing views as to why we're not in a bull market despite all of that, why it's not over, why it never started. Quantitative tightening, I showed you that. That's already going on. Or that's still going on. Coinbase, the Coinbase app. Is it the number one app in the App Store on Google Play or on the Apple Store? No. About 197 last time I checked. It's ranked 197. That's the graveyard for apps that screams niche hobby instead of must have. Google searches for crypto. How are they doing? There's not that many of them. They're really just trickling along. Safe assets like the 10-year treasury are paying 4% or higher. So the risk-averse people, or not even risk-averse people, but like even people that are typically risk takers are thinking, why am I going to invest in something that is super risky like crypto when I can make a guaranteed 4% on something that is at least perceived 100% safe? The relative strength index is just at 59. The fear and greed index is down in the 30s. And you see, the 30s, I mean, that's in fear territory. But like, to be able to say that the bull market is over, well, previously what happened is we were in extreme greed for at least 2 weeks before it all ended. So you see, like a lot of the 4-year fundamentalists, what they want to tell me is, well, Cairo, what you're doing is you're arguing that this time it's different. And I just say, well, so are you. Because in previous bull markets, we were in extreme greed for weeks before it all ended. We had parabolic blow-off tops. We had euphoria. We haven't had any of that yet. We had Bitcoin dominance decline so that the alts could take over. Right now, Bitcoin dominance is still pretty high. It's up in like the 60s. Let's see, let me check real quick here. No, it's high. It's like probably not 60, but pretty close to it. It's in like the high 50s. Yeah, 58.4. So it had a climb there since the Friday's events. So this time is different no matter how you look at it, because the market's just not acting the way that it normally acts. And if the bull run has completed, it's different this time then. And by the way, the total market cap year to date, how much has that grown? It's only grown 17%, which is not normal for the final year of a bull market. Also, not a single one of CoinMarketCap's 30 cycle top indicators have lit up. Not a single one of them. So we had a bull run where none of the indicators of the market top get hit, but we did top. And here's what I'm talking about specifically over here on CoinMarketCap. You take a look at this. Not a darn one of these has a check mark next to it. They're all X's. So the guys that put this together are either really stupid or they're really wrong. And this is going to, I mean, if it's all over, this is going to throw a lot of people into like some, it's going to cause a lot of chaos because a lot of people who follow these metrics and base their investment strategy on these metrics, they're going to have to come to this Jesus moment here where they go, oh my gosh, everything I know about investing is wrong. And we're not talking about little investors like you and me. We're talking about these big institutions that use these to decide. That's another thing. It's like all the institutions are still piling in. The smart money is still buying. Did somebody not tell them, hey, you know, it ends at the end of this year, or it might have ended already, but they're still buying? Why is that? Why would they still be buying? I mean, do they not know about the 4-year cycle? Of course they know about the 4-year cycle. Of course they know. But what they know is that there is just the cycle. It's not the 4 years that are causing it. All right? So here's what you're going to hear from the 4-year fundamentalists. They got just two things working for them. They say, well, previous cycles were 4 years, and now we're finishing up year 4. It's time to bail. And Bitcoin has gone up 7x, so it must have peaked out. Now it's time to pack up the Lambos and go away, rinse and repeat. Okay, I mean, those are fair observations, because those cycles did hum along very strongly, and the prices did spike. But you see, what you guys are doing is you're mistaking. Imagine like a doctor mistaking a symptom for the disease, or mistaking the fireworks for the gas leak. Those patterns weren't etched in some cosmic calendar. What they are is they are the symptoms of deeper forces, the kind that can cause these giant macro movements in the economy. So I'm probably wondering then, well, what is it that causes the 4-year cycle? What is the real catalyst behind it if it's not time? And for that, I have a chart that kind of proves my point. This chart here. And what this shows you is year-over-year growth in global M2. That's what these big green mountains are. The black line is the Bitcoin price. They only show Bitcoin here because it's just not practical to do this for every coin. But if we looked at total crypto market cap, it would be pretty in line and similar. And the blue line is M2 global supply. Now, I wanted this chart in particular here because it shows a couple of things. I mean, one, it shows the 4 major central banks. But what else this chart accounts for is credit creation. It's not just money printing, but also credit creation, because that is a form of money printing. But notice this here is like when the green peaks up, the year-over-year growth keeps going up, that's when crypto peaks. I mean, here's the start of the 2017 cycle. It was going. We peaked. We peaked pretty early here, but you see, this also kind of covers the alt season that went into 2018 as well. There is something to be said, though, of the fact that, like, the money supply will keep growing even after Bitcoin has peaked. Like, because what happens is Bitcoin overshoots what it's supposed to do just because of how volatile it is. So that is something worth talking about. We'll talk about that on a later stream. But as you just look through all this here, it really is pretty closely aligned. We have a great big pop. I mean, even a double top in the year-over-year growth of M2. And so, of course, we have a double top then in crypto that year, or in Bitcoin at least. And then when it goes red, that's when we're at the bottom of the bear market, when the year-over-year growth is negative. This right here is November 2022. That was a really bad time for crypto. We have had some small pops in year-over-year growth of global M2 so far this cycle, but not that great. It's really been an uneventful and unsatisfying cycle for that reason, just because the year-over-year growth in global M2 has barely budged above 6%. And to put this into perspective of, like, you know, why that 6% number matters so much is that in order for the Federal Reserve to meet their 2% inflation target, the M2 money supply has to grow by at least 6%. So on the global scale, the growth in the money supply is just too small to make anything happen really eventful. I mean, it's still making things happen. I mean, we're still getting some coins going up. We're getting Bitcoin going up. And the alts are getting a little bit every now and then. But it's incredibly disappointing to you guys, and you guys are not wrong for being disappointed. You're not wrong if you think that it's disappointing. Because look, the growth rate has not been that great. Over in the where you see the year-over-year growth on the far right, that is all China doing that kind of money printing. It's all China doing those green mountains there. Now, it was mostly China in the 2017 cycle, so they're not even doing as much right now as they did previously. They're not even doing that much right now as they did previously. Crypto Cairo is censoring people talking about 9-inch Fast Abdul. He is clearly in on the scam. Sad. How am I who am I censoring? Please tell me. How am I censoring anyone? I'm not even paying attention to the chat. I just saw that there. So please tell me, how am I in on the scam? You know what? I would love to be in on a scam, actually. Because, you know, I could use a little bit of money here to go down to Puerto Vallarta. Wouldn't mind taking a vacation down there this winter. Jesus Christ, man. Like, you know, are you here to just shill a bunch of crap in the chat? Or are you here to learn something? Because I'll tell you what, this stream here is just for the people that are interested in learning something. So if you're not interested in learning and you want to be negative, just go. Just go, please. Watch Raymond's Thoughts and Minds, or go into like the Twitter spaces. They love the negativity there. All right, so that chart proves my point that it is credit creation and growth in the money supply that causes crypto to go up. I've said it a gazillion times. Do you need more info? Do you need more verification of this? Because I got more verification of this. Looky here. We take a look at each one of the crypto market cycles and how it affected the total crypto market cap. In 2013 was the peak bull year, and we were at, what, $10 billion in total? 2014 was a bear market year. We pretty much got chopped in half there in the total crypto market. And you see the credit uptick, what happened was Bitcoin overshot itself. It overshot in 2013, so it went down in 2014. Because towards the end of the bull market, it overshoots itself. That's the parabolic blow off top that happens. But then the credit growth, the credit creation grew again in 2015, and that stabilized the crypto market after the crash 2014. Still, we had a steady expansion in 2016, so that kept the rally going. Then, 2017 was the peak of credit creation, and that was the Bitcoin top of almost 20,000 at the end of the year. Year-over-year credit growth slowed down in 2018. So that's where we experienced the 2018 bear market. Then it rebounded because the credit started growing again. Sure, it slowed down, but China was printing money still in 2020, and then also the United States started printing money. And that kicked us back up in 2020. And the amazing year that we had in 2021, where we basically did a 10x from 2019 in crypto market cap, that was due to the zero interest rates of the Fed, the zero interest rate policy, and then all the money printing they did on the balance sheet, which I've shown you a bunch of times here. I'll show it to you again, though, just to hammer in this point. Where is it? You see all this right here? This big upward shoot. That's just the Federal Reserve printing all sorts of money to save the economy. All right. Now, back to my Substack here. When credit creation heats up and grows, crypto pops. But when it contracts and reduces, well, that's when a bear market occurs, and that's not a coincidence. Because you see, here's what here's the fight that I have with the 4-year fundamentalists. All right, I don't know if we can call it a fight or if we can call it a debate or whatever we want to call it. It's this here: is that I can show you step for step, domino for domino, how a new dollar bill being printed and flowing through the economy ends up pushing crypto assets up, how it causes them to appreciate. I can plot that out for you step by step. But when I asked the 4-year fundamentalist, can you tell me how time causes crypto to start and stop and push through the cycle step by step, domino for domino? Can you please show me how that's done? This is what I get. Because I'm asking them, will you show me how does that happen? We had T-Bird on, and no, all due respect to T-Bird and everything, he couldn't show me how time is causing that to happen. And he was seems like a lot less aggressive or a lot less fervent and steadfast in those beliefs while he was on here than he does on Twitter, which it's just the way that you got to be on Twitter. You got to be more outrageous. But when I ask him, hey, show me how time is telling crypto what to do, nobody can tell me anything. But I can show you exactly how money printing, like you see here on the screen, causes crypto to go up. I've done this demonstration a few times before. I'm going to do it again here, so everybody pay close attention here to it. Oh, hey, Kirill, I see you there. Kirill the Thrill. Got a little bit of a graphic here that I can show you guys that does this. This is on the Substack, by the way. This just kind of shows the flow of money once it's created. Let's see. What can I use here for illustration for money? You know what? I'm going to use this. This yellow piece of paper. All right. What this is my CFP card. I've said it before, I'll say it again. If you're going to work in financial services, don't get this designation. It's a waste of time. But let's pretend that this was money. I mean, it cost a lot of money, so it's a waste of money. It's close enough, right? So this gets printed off at the central bank. New dollar bill that has been created, and it leaves the central bank to go into the economy. The first stop it makes is it stops at a commercial bank. What does the commercial bank do with it? They lend the money out to businesses. Now, a business has the newly printed money. What do they do with it? They got a lot of things they got to do with it. They got to buy supplies. But if we're looking for like the first if we're looking for like the real next step here that gets this thing going, gets the what we call velocity of money, circulation of dollar bills in the economy, they got employees probably that they have to pay. So it goes from the business to the employee paycheck, and now it's in the employee's pocket. What does the employee do with that money? Do they just set it on fire and that's the end of it? No. They go and they spend it, probably buying things like gasoline or groceries. So they go to the grocery store and they spend the money. Does the grocery store, what do they do with it? Do they just set that money on fire and now it doesn't exist anymore? No. The grocery store takes the money and they use it for their expenses. Maybe pay their employees or maybe pay their vendors. But it's going to continue circulating. So let's suppose it goes to a vendor. All right, the grocery store vendor now has the money. What do they do with it? They're probably going to have employees they need to pay too. So they pay their employees. Now somebody new has the money. It's going to keep changing hands over and over and over again. But eventually, this newly printed dollar bill is going to end up in the hands of someone who wants to save this dollar bill. I mean, so say we're at the vendor and they pay an employee who's already very well paid. They make more money than they need for their expenses. What do they do with the excess? Well, they save it. They can save it at the bank. And if they deposit it into a bank account, what does the bank do with it? Do they set it on fire? No. What happens is the bank takes that dollar bill and they use it to buy a treasury bill. So they use it to buy a treasury bill. What does that do? Let me show you. That's this chart here. A treasury bill is these four right here. If it's 1 year or less, that's a treasury bill. Every order that is placed to buy a treasury bill causes these yields to go down. when those yields go down, well, that means every other investor in a treasury bill that's not a bank, because you see, banks don't have a choice. They have to invest in treasury bills. So every other investor that's not a bank, they're going to look at these treasury bills and be like, oh, man, the yield on them has gone down because, man, the banks have been buying them all up. And, man, that kind of sucks for us here. I can't get my good 4% yield on those treasury bills anymore. What am I going to do? I guess I'm going to have to go out further on the yield curve. Maybe they'll buy the 10-year treasury, and their purchase order is going to push the yield down because it pushes the price up. When you push the rest of the yield curve down and it earns less interest, the people that would invest in those treasuries are now going to say, oh, man, I can't get the return that I used to get. I'm going to have to invest in something riskier, like maybe a corporate bond, or maybe a stock, or maybe crypto. Also, when people are buying up these treasuries, these safe investments, that also causes forced buying of risky investments. If you haven't heard of forced buying before, like this is how you make money in stocks or anything related to Wall Street. You just got to understand forced buying and forced selling. If you understand that, you'll make so much money. Because when bonds get bought up and their prices go up, that's going to force a lot of mutual funds now to buy stocks. Because a lot of mutual funds, or all mutual funds, have a charter that tells them how much they're allowed to have in bonds and how much they're allowed to have in stocks, and that they must maintain that balance no matter what. And it's true not just of mutual funds, but also ETFs, pensions, college endowments. They have a charter that tells them how they must invest. A portfolio manager must obey the charter. So when you have treasuries being bought up, that causes forced buying of risk-on investments. And as those risk-on investments get bought up and their prices go up, a lot of the return potential gets taken out. It gets realized, and you have to go out further on the risk curve in order to make a return. And that's what eventually pushes people into crypto, is the dollar bills that are circulating through the economy eventually wind up in the hands of somebody who wants to save dollar bills. Because when it's in that person's hand and they put it in the bank, it stops circulating. This is why quantitative easing just makes the rich richer. Or this is why it creates that K-shaped recovery that we're used to seeing. When a recession hits, they say, well, it's a K-shaped recovery now. And what that means is like the rich got richer while the poor got worse. Because the poor, they got to pay their bills. They got to buy their groceries. They got to spend their money. And it eventually ends up, those dollar bills eventually end up in the hands of the rich. And the rich don't need to spend as much money, so they can save money, and they save more money, and they make more money. Because they don't just stick it in the bank, they also invest it. Even if they stick it in the bank, that causes somebody else to have to invest in risk-on investments. I hope that this makes sense. If you guys, if I'm not being clear on this, if somebody's lost and doesn't understand, just throw something in the chat saying, hey, I'd appreciate a little bit more explanation. All right, I'm not going to make fun of you or call you out by name, be like, are you stupid for not getting this? But it's very important that you guys understand this. It's very important you understand that diagram I had up and how money printing always ends up in financial assets. The final destination of every dollar printed is a financial asset. That's how it happens. That's why money printing has always been good for the stock market. That's why it's always been good for crypto. That's why it's always been good for hard assets. Any financial asset out there benefits from money printing because of what you see here. That's exactly how it happens. All right. Going to do a little PSA here, then we'll get right back into it.
Why does crypto suddenly explode into unbelievable bull runs, only to crash just as fast? It's not luck. It's not random. It's macroeconomics. In decrypting crypto, you'll uncover the hidden forces driving every major crypto rally, forces tied to the global debt machine, central bank liquidity, and repeating market cycles. This isn't another blockchain basics book. This is the blueprint Wall Street doesn't want you to read. The playbook that shows you why crypto moves when it does, and how to spot the next bull run before it starts. Don't miss the next cycle. Read Decrypting Crypto. Arm yourself with the knowledge to ride the wave before it leaves you behind. Decrypting Crypto by Cairo Code. Available now on Amazon and Audible.
All right, so I really hope that all made sense. That little demonstration that I did about how the
Why does crypto
new money being printed
suddenly explode
is
into
going to cause
unbelievable bull runs?
all of these financial
only to
assets
crash just
to
as
go up.
fast. It's not luck.
I think that kind of
not
explains
random.
it all. If you need me
It's
to provide
macroeconomics.
further explanation on it, fine,
In
I can provide further
decrypting crypto,
explanation.
you'll uncover the
But
hidden forces.
Everybody says, "Oh, this bull
Every
market is
major
all over,"
crypto
when no
rally,
money printing has
forces
occurred.
tied to the
It's looking
global
more and
debt
more like
machine.
money printing is going to
Central
occur.
bank liquidity.
What I say then is,
Sometimes you just gotta shut the FUD up.
y'all got to shut the FUD up. Oh, look at this here. We might have some breaking news going on here. I think that, let's see, we get to, where's coin market cap? Bitcoin might actually reach 116,000 live on the stream. It's getting very, very close. Yes, well, it was higher. It was pretty close right there. I should just kind of keep it on here, because, like, if it reaches 116,300, a lot of shorts going to get liquidated. And when that happens, you're going to see that thing go up a lot faster than we've seen it go up already. It's like, how is it able to move so quickly? I mean, yeah, while I hate leverage and I hate the short selling and all of that crap that people really shouldn't be doing, still, because they do it, that's also there's a good side to it, because that also is what causes crypto to pop up as hard as it does and as fast as it does when shorts get liquidated. That being said, you're short selling Bitcoin right now, you're extremely stupid. And you deserve to be liquidated. You deserve to lose all of your money, because now is the worst, absolute worst time to be shorting Bitcoin. All right. And everyone, please do let me know if you need any help understanding how new money being printed ends up in a financial asset and ends up in crypto. Because I'm trying to map that out so that everybody understands it and everybody sees it. That really is like the line of dominoes for why I say money printing causes crypto to go up. See, the 4-year fundamentalists, they ain't got nothing like that. They don't tell you step by step, domino for domino, what it is about time that causes the crypto cycle to occur. All they say is, well, it's always happened that way. Okay, well, why has it always happened that way? Oh, gee, we don't know. It just does. Sorry, that's just not a good enough explanation. All right, seeing Bitcoin approaching 116,000. I would like to know why it's doing that, wouldn't you? We would like to know what's causing that, right?
A legitimate question, young man, deserving a legitimate answer. Now then.
But apparently, they just want to keep the mystery going. Like it's, a zombie movie. Because, like, the best zombie movies are ones where, like, they don't explain too much what's causing all the zombies. A great horror movie in general is like that, where they don't explain too much. Like, if you're looking for a great horror movie this Halloween, great one is called Weapons. Because in that one, it's a nice original idea, where I think it's original. And they don't explain too much about, like, why all this stuff is happening. They kind of keep it mysterious. Or if you want to, like, a really terrifying horror movie, as I watch The Substance, that's where I got this clip from.
Control yourself!
That's a terrifying one. And again, in that one, they don't explain too much. I like it when they kind of keep it vague as far as what's causing all of the horror and everything, or they don't waste a lot of time explaining it. All right. So why is this cycle that we're in right now, in particular, the fourth year, why is it underperforming? I mean, it's not been that great, but I'll tell you what, it's because of the quantitative tightening that the Fed is doing. The global M2 year over year growth has not been that great either. It's only been 6.73%, mostly done by China. They're the ones doing all of the money printing right now, and they're not doing enough of it to cause the crypto market to go up a lot higher than it has. I mean, see, we need a really powerful shock to the year over year growth in money printing, which we typically get because what happens is there's an emergency in the economy that the central banks, or really the politicians in charge, the politicians don't want to be held responsible for the emergency or the disaster. So they have the central banks turn on the money printers to bail them out of it. You see, when we go into recession, typically what happens is they put the pressure on the central banks to pull us out of it. I mean, the whole reason why the central bank raises interest rates is because if we go into a recession, they can drop those interest rates to get us out of it faster. That's the whole point of like the interest rate policy of the Fed. I mean, there's more to it than that, but that's the main point for it. And you see, there had been a big problem back in 2019. The Fed started cutting rates prematurely. And because they cut rates prematurely, and we had a real emergency in 2020 with the pandemic, they didn't have a lot of room to cut. Because they didn't have a lot of room to cut, I mean, their interest rates were already like 2%. They had to take them straight down to zero. And then they had to do quantitative easing on top of it. And they really wish that they hadn't done that because that caused a bunch of inflation. All right. Well, that coupled with the fact that we paid people to sit at home and not work, and production was stopped and the supply chain was disrupted, that caused a lot of inflation. All right. Now, how about some hope? Is quantitative tightening going to go on forever? Will it go on forever? That's what apparently some bears seem to think. There's a lot of bears out there that are not so much like the 4-year fundamentalists, but they're much worse bears because they really do believe that, oh God, crypto's never going back up. It's going to start going down. It's going to stay down. How do they come to that conclusion? Because you see, here's the deal. This is what's pushing it down. Quantitative tightening. There is 6.5, really 6.6 if you round up, $6.6 trillion on the Federal Reserve balance sheet. This, by the way, these are bonds that it has. These bonds on the balance sheet. As the bonds come to maturity, the balance sheet gets smaller for each bond coming to maturity. Is there an infinite supply of bonds on this balance sheet? No, there is only $6.6 trillion worth of bonds on the balance sheet. And every bond has to mature. Bonds do not exist in perpetuity, going on into eternity. There's no eternal bond. They all end at a certain point. So at the pace that it's going right now, the balance sheet will have most of the bonds matured on it. At the pace that it's going right now, most of the bonds on it will be matured come late 2026. Late 2026. Now, do they have to wait until the balance sheet is empty to start quantitative easing again? No, they don't. But another question here is, do we even need the Federal Reserve to go back to quantitative easing for us to have a very nice bull market season again, to have a really nice pump? No, we don't. Because check this out. See here where it's pretty flat? Very flat. Trying to get it. Okay, so right here, where it's flat, this was the 2017 cycle. It stayed flat all the way up until January 2018. And because it stayed flat, we had a great 2017. We had a great cycle there. I mean, sure, China was doing a lot of money printing too. But because they weren't doing any tightening here at the Federal Reserve in the United States, that only helped the crypto market to go up. Or like the tightening that they were doing, there was some of it right here, but it really wasn't any meaningful amounts. I mean, like at the beginning of the year, we were at 4.45 trillion. Then by the end of the year, we were also at 4.45 trillion. So really, they may as well have just not done anything with it. So this, I don't want to say that having a flat balance sheet is just as good as an increasing balance sheet, but it is a heck of a lot better than a decreasing balance sheet. As long as they're not decreasing it, that's good for risk-on assets, particularly crypto. The only time that we ever had a flat balance sheet while crypto was around was in 2017. But every other time in the history of the Federal Reserve, when they did a flat balance sheet, that was always good for risk-on assets. It was good for stocks. It occurred back in, let's see, when else did it occur? 2003 to 2007. They had a very stable balance sheet. And during that time period, stocks went up 87%. And 1990 to 2000, I mean, the 90s were just a great time to be alive. Probably one of the best times ever to be alive. They kept a pretty flat balance sheet at the Federal Reserve, and stocks went up 340% that whole time. So when that happens, well, then it's good for us because it just tells the market, hey, we're going to just keep this balance sheet just like it's at. We're not tightening. We're not loosening. You guys go and innovate and do what you do. Don't worry about monetary policy. It will be incredibly predictable for the foreseeable future. That's good. Now, the rates are another problem. Right now, federal funds rate is 4%, sometimes 4.25%. That's not an exact rate. What it is it's a range. Is that going to stay forever? No. No, that's not going to stay forever. Because here's something that the four-year fundamentalists ignore, is what Lynn Alden calls fiscal dominance. All right? And what fiscal dominance is it's just saying that the federal government is spending way too much money for the Federal Reserve to be able to ignore. The Federal Reserve has to come and bail out the federal government because the federal government is not going to get its act together. So the Federal Reserve now will have to act as a supporting, not, when you got a parent, you got a parent that can be strict, and that's a good parent that says, no, you're not going to go to this rich, fancy, rip-off college. Or, oh, you got arrested? Well, I'm going to let you rot in jail. Maybe you learn your lesson. All right, that would be a good parent. But then the parent that the Federal Reserve is going to be when it comes to fiscal dominance is a parent that says, oh, okay, here, you want to go to this rip-off private college? Absolutely, you can go there. I'll pay for it. Oh, you racked up, $100,000 on the credit card? Okay, you know what? I'll pay for it. Oh, you went to jail? Don't worry, I'll bail you out. In fiscal dominance, the Federal Reserve becomes a accommodative parent that does whatever or takes care of whatever the kid messes up. Whenever the kid gets in trouble, the parent bails them out. A helicopter parent, I guess. Fiscal dominance turns the Fed into a helicopter parent. All right. I mean, the world is still kind of pretending that printing money is sustainable, or they still want to believe that it's sustainable. And what we've got coming up this year, and also next year, not just this year, but also next year, is a debt tsunami from the federal government. Here's what I'm talking about. I got a chart that really shows it all here. the Treasury refinancing wall. And does this have a immediate impact on the Bitcoin price? I don't know if we could say that for sure. I don't know, because we could see the trend is somewhat related here, but not really that related. Not really that. These red bars tell us that 1.5 trillion is being refinanced, or it's coming to maturity and rolling over. And I know you can't really see the numbers down here at the bottom, but it's just showing month to month. I mean, this was all the year 2024. Here's where that cuts off, and then here's where 2025 starts. So we still got a good, let's see, 3 to 4, about almost $5 trillion left in this year that has to be rolled over and refinanced. But then come next year, we got another 7 trillion that's going to need to be rolled over and refinanced. And this is why Raoul Powell thinks it's a 5-year cycle now, because a lot of debts got pushed out 5 years back in 2020 when the rates were near zero. A lot more treasuries were issued out at the 5-year time horizon. But what we've got here is there's a lot more debt that's got to get rolled over. The rates are going to have to come down when they roll over that debt. Because if they don't, the United States is going to be in what they call a death spiral, where $1 to $2 trillion a year is being added to the national debt just in interest, when the interest costs on the national debt are already greater than Medicare, and they're greater than defense spending. We can't do that. We can't keep that going on. Now, do you think the United States is going to start doing austerity and is going to start cutting spending? Well, we tried doing that with Elon Musk and his Department of Government Efficiency. What did we do with that? We said, hey, Elon, screw you. We don't want your cuts. We're not going to codify them. And they've passed the big, beautiful bill without a single cut from Elon Musk's discoveries. So it's clear they're not cutting any of the spending. They're going to keep wasting money. Is this Federal Reserve going to just stand by while the country gets destroyed because of it? No. So what they're going to do is they are going to have to keep reducing the rates, and they might have to start the money printer to start absorbing some of those bonds. Now, they don't necessarily have to turn the money printer on for it to be good for us. Because a lot of people out there are very bearish on the money printer being turned on. They don't necessarily have to do that. If they reduce the rates low enough, and it makes a lot more sense for a bank to buy up, I'm talking like a regular bank like Bank of America or JP Morgan, or even a commercial bank. It will make a lot more sense for those banks to buy up long-term treasuries like the 10-year treasuries, which will bring those rates down and make it less expensive for the government to finance its debt. It will make a lot more sense for banks to do that when the federal funds rate is lower, because the bank practically pockets the difference between the federal funds rate and the 10-year treasury rate. I mean, it's a little messier than that, but try to keep it as simple as I can here for everybody. Also, many of the other central banks are going to have to print money. I mean, we already heard from Japan and their new minister that she wants to do a lot of money printing. The situation going on in France, everybody better be paying very close attention to what's happening in France, because that is going to get the European money printer going. I think it's going to have to get the European money printer going. So even if they don't do money printing here in the United States, there is going to be a lot more M2 growth in the future. That's why I say this bull market is not over. There's going to be a lot more credit creation in the future. You're looking at it right here. About $4 trillion in credit creation that's going to have to be done this year. And then about $7 trillion in credit creation that's going to have to be done next year. And that's just the federal government. That's it. It's just the federal government. If interest rates keep getting cut, corporations are going to have to borrow. They're going to be more interested in borrowing money. It's good for corporations to borrow more money and get in debt and issue bonds, because bonds are the interest expense on bonds is a tax write-off for those corporations. So they are happy to do it. Also, when those interest rates come down, well, now that since they have a lower interest expense, they'd be like, well, we can take on more debt here and expand our business a lot more, get the economy really juicing, get more money greasing the engines. Or you just got more oil for the RPM is what's happening. So it's not over. There's a lot more credit creation that's still yet to come. There's a lot more money printing that's still yet to come. And all that money printing, not every single dollar, but at least 7 cents out of every dollar created, probably more, but at least 7 cents out of every dollar created ends up in the crypto market cap. It doesn't get distributed evenly, but you know where it does get distributed to? It gets distributed to the coins that have the lowest liquidity. That's the one that it has the most impact on. The coins that are most impacted by money printing are the coins with the lowest liquidity. Hey, anybody know of any coins right now that have very low liquidity? Yeah, I think that there was a bunch of them. There was about 5 of them that was created by some guy named, what was his name? Richard Bart. Is that what it was? Yeah, I think it was Richard Bart. I think he created some coins that have very low liquidity right now. All right, so that is the base thesis I have for why this bull market is not over yet, why it still has a lot of runway left in it. That is what I have to say to tell everybody. Y'all need to shut the FUD up.
Hey man, just want to let you know that sometimes you gotta shut the fuck up. And this current time is just one of those times you gotta shut the fuck up. I don't think you're a bad person, I just don't want to hear you talking anymore. You gotta shut up.
So that's what you tell people when everyone's being bearish and you hear a whole bunch of bearish crap in all of the spaces and everything. Everybody get your questions in. We're going to wrap up pretty soon. You want some more hopium? I do got some more hopium for everyone. The whole debasement trade narrative, that actually has a Bank is projecting Bitcoin will be 181,000 at some point next year, possibly even 231,000. And they do believe that Ethereum will be somewhere between 54 to 7,500. That seems pretty low to me. I'm hoping it's a lot better. That is denoting some serious underperformance on Ethereum. Like, if Bitcoin does what they say it's going to do, well, Bitcoin's going to do at least a 3x from its previous high. But then, if Ethereum only does what they say it's going to do, well, it's not even doing a 2x. So I think Ethereum is going to run more than Bitcoin when this really gets going. And they say the debasement trade is what's going to cause that. Token Metrics believes that the total crypto market cap will be anywhere between 8 to 14 trillion. I also think that it is possible for a lot of stable coins to come in and really beef that. The stable coins are going to really beef that market cap up. I think it will also be possible for Tether to surpass Bitcoin. I'm not saying it's going to happen, but I think it's possible. Tether could have a lot of market cap and could catch Bitcoin. I mean, definitely pass Ethereum, I think. Because the whole point of the Genius Act was to repatriate all of the euro dollars out there. Well, there's about 12 trillion euro dollars out there. So if we got just 6 trillion, it would already pass. It would be like the number one altcoin out there, or the number one coin in general. The Bitcoin ETFs, they keep inhaling capital. They took in a lot today. They're going to be taking in a lot in the near future. That's not going to slow down. And we have a lot of altcoin ETFs that are still yet to be released. Some of them would have been released already, but the government shutdown had prevented that. Lots of capital is stacking up, waiting to be invested in them. I mean, we did see that the ETF release for Ethereum was very disappointing. I don't think that will be the case for Solana, for XRP, for Cardano, for Sui, for any of those coins, because so much money is waiting to be deployed in them. JP Morgan, typically bearish on Bitcoin, they now are saying that there's going to be a lot of great upside price action in Bitcoin ETFs, and institutions are going to want a lot more of them. 85% of all financial services firms want in on the crypto ETFs. That comes from JP Morgan, who's typically not very crypto friendly, or I don't think too much of it. Total value locked is still going up. It's at 237 billion right now. There's a lot more coming in. A lot more coming in on TVL. I mean, just Aave has got Aave got picked up about 74 billion on it, I think. I mean, Polygon even. Polygon's TVL went up 43%. And Polygon is not viewed very favorably by the overall crypto market at large. So if they're sucking up that much TVL, matter of fact, we got to take a look at something related to that here. Let me head on over to DeFi Llama for that. I was like, this is kind of how I choose investments. If you haven't seen me do this before. Let's see, go to DeFi Llama. Let's take a look at Polygon. I'm not saying buy this here because like there's a reason why Polygon is down. Okay, so it's got a TVL of 1.14 billion. Now, what is Polygon's market cap? 2.2 billion. So, what I do is take the TVL and divide it by the market cap. That gives us, or flip that around. Take the market cap and divide it by the TVL. And that gives us a ratio of 2. What that means is it's kind of like a price earnings ratio for a crypto asset. Like if you were able to pocket all of the TVL like it was profits in a cash register and you bought the cash register, well, you'd have to pay 2.2 billion and you would get the 1.1 billion in TVL, so to speak. And it's not, it's a lot messier than that, but that's like the best way I can simplify it for everyone. So that's kind of a way that a lot of, it's the way I kind of choose investments is I look for something that is 2 or less, where TVL, where market cap divided by TVL ends up being 2 or less. Because what that tells me is that the chain is undervalued for the amount of activity that it has going on it. See if we got any questions here. What do we got? Anything? Kingsway asks, do we still have more down to go? Yeah, I mean, I think we still have a very difficult Q4 ahead of us, if I'm being honest with you. Because so many people are married to 4-year fundamentalism, and they're looking at their portfolios and going, well, it's the end of the 4th year, and this thing is supposed to be ending soon, so I need to get out. A lot of people are going to be of that mind, and they're going to hold to it, and they're going to sell out. Also, I've said this before, there's going to be a lot of tax loss harvesting come the end of the year because most coins are not in profit. I would go as far as to say that probably 90% of the top 200 are not in profit. People are going to do some tax loss harvesting, and they should do some tax loss harvesting, but they should remember to also buy back into it. They need to buy back into it. I think January as well is going to suck too, because the few coins that are in profit, like Bitcoin, are going to get sold down because it's a new year for taxes. So I think that we'll have a difficult January. After that, I don't think it's as difficult anymore. I do think it could take a while before the United States money printer gets turned on. I don't know if it will get turned on, but if it's going to get turned on, it will take at least until January 2026. Now, that doesn't mean that it gets turned on right in January 2026. It could still take a long time from there to get turned on. And it's also a matter of, do they have to get it going? Do they have to? Because there's other things they can do in spite, or other things they can do instead of turning on the quantitative easing again. I imagine they probably would much rather do the alternatives, because that quantitative easing, that's a nuclear bomb that you don't want to drop it. You don't want to drop it unless you absolutely have to. Looks like that's all the questions that we have for today. So, let's see, I don't know when my next stream will be. I know typically I did them like Monday, Wednesday, Friday. I'm not sure if I'm doing it this Wednesday, but if I don't do it Wednesday, I will definitely do it Friday. Cairo out.
That is it for us today, you glorious degens. Smash that subscribe button to join the rebellion, and follow me on X at ReinventIdeal for more unfiltered truth bombs between live streams. And if this was your first time listening, head over to reinventideal.substack.com, because I have a free gift waiting for you there. If you become a free subscriber, you'll get a free copy of my book, Your Parents Were Wrong, Debunking and Replacing Outdated Advice, packed with the wisdom to outsmart the system. It's absolutely free to join, so no excuses. Grab it before the suits catch on. And remember, the bears get blocked right here and told to shut the FUD up. Until next time, this is Cairo Copeland, your millennial Moses, here to lead the most jaded generation to financial liberation. Here to reinvent the wheel, or reinvent ideal.